Hello, good afternoon, everybody. It's Chris, your favorite coach, your favorite host, back at you again with another edition of Conversations with Chris, where I talk to people that I find interesting and have valuable things to say. And we just broadcast it out there for the world to hear, listen to, ask questions, engage, and hopefully you'll think they're interesting too. And today we have none other than Ben Lavender, New York's favorite British mortgage broker. Thanks for joining us today, my man.
Chris, thank you so much for having me, and I appreciate the word, someone interesting. So thank you very much. Feeding the
Well,
ego. We always need something to feed the ego a little bit. So thanks, man.
Well, it's really, I started doing these things because I was having so many like coffee talks or like going out to lunch with people, and I mean, I get to. I'm sure your business is the same way, where you get to cross paths with so many people that have valuable things to put out there. And I was like, man, people need to hear this. The world needs to hear this. And I work with a lot of real estate professionals. So do you. And yeah, so thanks for joining us. And one of the things that really catches my attention anytime when you see someone in the world of mortgages. I mean, coming from the real estate industry, a lot of people come out there with their hands out, say, "Oh, send us your buyers. We can close in 30 days. We can do this. We can do that." And you kind of had this approach of, "Hey, how can I help you grow your business?" And you joined us for the social media summit, kind of teaching
Yep.
agents how to do podcasting. And I mean, that was wonderful. So thanks for doing that and stepping up the game a little bit.
Of course, man. Appreciate it. And you're 100% right, because all loan officers more or less have the same exact pitch is yes, exactly what you said. We can close under 30 days. In New York, it's not that important to close under 30 days, given our average CTC timeframe is under 18 days. But average contract here is 45 to 60 days. So what does it matter? And truth be told, it goes longer anyway. So at the end of the day, I mean, this is something that I say pretty frequently when it comes to referral relationships,
Mhm.
whether it's with agents or some other contact, the relationship comes first, absolutely, but you have to be reliable and you have to give some type of value. And each loan officer needs to figure out what their own value proposition is. It's going to be different depending on the personality. So if you're newer in the business, you got to figure it out. You got to figure out how
Mhm.
you can give something back and separate yourself. And if you've been in the game a while, you got to adapt to these times because now is a scary time to be in the mortgage business, especially if you're newer. And everyone's freaking out. Everyone's
Mhm.
freaking out, but it's going to be okay. We've been through this a gajillion times.
Yeah, so I had a morning of coaching calls with some clients, some real estate clients saying, "Oh man, I don't know if you know what's happening, Chris, but everything is taking longer to close." It reminds us of when it was like
Really?
earlier, and I said, well, I said that's surprising. I know what's happening. I know the interest rates are bumping up a little bit. We kind of just went over 6% for the first time in quite a few years, which by the way is still historically low. And are you running into that a lot, Ben? Like where you've kind of in contract kind of the home stretch ready to close, and all of a sudden there's a shift in this mortgage interest rate. Now you have buyers that the ratios that might kind of price them out, and they can't afford it, or you've got to kind of do some things and get creative in there to get a deal to close. Are you running into that?
So, knock on wood, no,
Hmm.
we haven't, because everyone that is looking to close soon or is concerned about rates and doesn't want to take the
Hmm.
risk, we already locked them in,
Okay.
right? So we don't have to worry about newer buyers that have very, very tight debt to income ratio. Yes, we had to go back and revisit and adjust the interest rate to make sure that they still qualify. Right, all loan officers should be doing that. If you're a realtor watching this and you just got a pre-approval a week or two ago, make sure to check in with your loan officer and make sure that they still qualify, especially in the higher price points, right? Because a quarter percentage isn't going to make, or even half a percentage or 4%, whatever, it's not going to make a dramatic difference on those lower loan amounts in the 200, even $300,000 range. But if you're like slightly under a million, even 500,000, a 4% can disqualify someone potentially.
Sure.
So it's really important to absolutely go back to the loan officer, make sure they still qualify, make sure that loan officers are pre-approving people properly to begin with. And something else you said, Chris, which I found, I was surprised that you said this, is that people are running into issues and it's slower to close.
Yeah.
That should not be the way, right? Because production nationwide, or mortgage applications in general, have dropped down significantly. So
Mhm.
underwriting and processing should have way more free time on their hands.
They're
So
not so backed up because the applications are down. So they're,
yeah.
so now you've got the staff to handle it. So
Exactly.
yeah.
So that should not be the case. If someone's saying that it's just too busy, that doesn't make any sense. It's
You know
got to
what
be
I'm
some
thinking is
other reason.
happening is people, and we're talking about how important it is to lock rates right now. And it ultimately comes down to the loan officer, right? You guys are kind of saying, hey, I think you should lock this rate, or maybe you shouldn't lock this rate just yet. And maybe people are kind of playing that market and saying, don't lock the rate. Then all of a sudden that rate jumps up, and now they're stuck. So I mean, are you? How do you know when the right time is to lock, and is it based on the purchaser? Is it a case by case basis?
It's
Because
a
it seems like
really
you're not running into those issues.
no, it's a great question. It comes down to when are they closing
Hmm.
and what the buyer's appetite is for risk.
Okay.
What we like to say is if you like it, lock it. Right?
Yeah.
If you cannot take the risk of an additional $25 a month or whatever it is in payment, just lock in the rate. Truth be told is that once this recession kicks in fully, we're anticipating rates to drop. So chances are everyone that's buying or that has bought over the past few months and that's going to until the end of the year is realistically going to refinance
Mhm.
sometime next year.
Okay.
Worst case year after, if that's how long it takes. I think that the rate drop is going to come sooner rather than later, but we'll see. So,
Mm.
the other thing as well is like managing client anxiety because a lot of them are freaking out and rightfully so. You don't want to get stuck with a payment that you don't like. So it's having those conversations early in the game. A lot of loan officers avoid those conversations because they're tough, right? They're worried that they're going to get shopped around. But truth be told, if you're transparent with your consumer, you educate them on what the market is, as opposed to them seeing you as someone to negotiate against, you're going to be an advisor. That's what we truthfully are, or what we should be. If you know what you're doing and you have good experience and expertise in this business, you should be advising your clients on options. Perhaps they take an arm. A lot of people, arms are very scary to them. So, maybe the 30-year fixed is the way to go. Maybe there's a
Mm.
different product out there. It's different for everyone, but
Mm.
regardless of how you play it, the point is to communicate with your consumer upfront, make them aware of the options. And to answer really your question, Chris, is that we are tending to lock earlier rather than later. So the New
Okay.
York standard, by the way, and I say that again because it is very specific to New York, because contract closing dates, again, on for 45 days to 60 days post contract signing. And again, those are on or about dates. So they can go another 30 days. It could be very common for loan officers in New York to really wait until the last minute to lock. That should not be the case now. Now, loan officers should be taking 60-day to 90-day locks, going over those options with the consumers. And again, it's scary for loan officers to do because they're scared they're going to lose them. But you build more trust over time. It's worth doing. It makes more sense.
Sure, sure. So it's kind of really about, now you're looking at the whole package, right? Where you've every buyer is different, every scenario is different. So you're advising, and I love how you said be an advisor, right? And you're a mortgage broker, and in this kind of climate, uh, do you feel that you've got an advantage over a bank or a direct lender, that with the array of products and banks that you're able to work with, over somebody that might be more restricted at a bank or a direct lender?
Yeah, I'm a little bit biased, just a little bit,
Yeah.
but of course, because we operate. So the way that it basically works is that, long story short, our margins are lower.
Yeah.
Right. So both, I as an individual mortgage broker, as a loan officer, I get paid less than the average direct loan officer lender.
Mm.
And the loans that we are brokering them through are making less than their bank. Right.
Sure.
So you've got two layers of less margin. So we make it up in loan volume and referrals because our
Mm.
rates are so good and
Mm.
expenses are minimal.
Yeah.
So I absolutely think that we have an advantage from a margin standpoint and a rate standpoint. And then, yes, in terms of our options, if you're a loan officer working at a lender and you only have the standard conventional FHA, VA, USDA products, and you're not experiencing or even looking into like some non-QM stuff, you're not bringing in some jumbo investors that can get on some really good rates for your consumers. you're in trouble right now, because
Mhm.
everyone, especially the non-QM stuff, is blowing up. These investment products, DSCR,
Sure.
these profit and loss products, bank statement products. So they've been around a while, but even clients are rate sensitive on those products too, and they're not
Mm.
actually that bad. On
Yeah.
average, they're anywhere from 0.5% to 1.5% higher than the standard product, and they're so much easier to qualify for.
Yeah, I mean, we're looking at. I mean, even for my property here, we're looking at like around 7% for a DSCR, which is again they're easier to qualify for, less documentation. There's more stuff available out there. So, because I think I've been hearing a lot of people where you're the conventional, a paper buyers, it's of course they can go anywhere, but sometimes when you have things are a little bit tricky. I mean, particularly in New York, we have a lot of self-employed people and a lot of investors that going to someone like yourself over at Madison Mortgage, they're going to have more accessible to them, more available to hear that hey, yes, do we have a great program or product for you? And
Yeah, it's an advantage, and we enjoy it, and that's the problem with it. It's the main reason why we moved away from direct lending,
sure.
because not only because of the margins, but just being stuck in a box. And there's a very common myth in direct lending that you have no control over like your underwriting and stuff like that, or other way around, you have no control being a mortgage broker.
Yeah.
So the difference is as a mortgage broker, the same way that loan officers basically poach realtors for business, these
Hmm.
wholesale lenders poach us to send them our business, right?
Exactly.
So they're, we know we're only as good as our last deal. Same goes
Hmm.
for them. So they're giving us excellent service all the way through. Back when I was in retail, and even like my retail buddies now to this day tell me that their underwriters aren't so quick to get back to them, because what are you going to do? Send the loan somewhere
Yeah.
else? No, you're stuck here.
Hmm.
So a lot of the myths of the disadvantages of the broker channel are not true whatsoever, and we have the results to prove it.
A lot of misinformation out there, and I do appreciate you guys kind of taking on the position to educate. You do work a lot with directly with consumers. You were saying, when we were together up in Long Island, and you're saying you do work a lot with realtors too. You get a lot of business, a lot of good referral partners and realtors, and you kind of take on the position of educating them about these things. So I just wanted to talk more about that, about like what you guys have in place, for your real estate partners, from the form of education, your podcasts, all that stuff, the marketing advantages that you guys have. What are you guys doing that's kind of really, taking flight in the market?
So we've got like the main things, and thanks for asking that question, Chris. The standard, print, lead generation, all
Mm.
that typical stuff, right? What they tend to really enjoy right now is the social media stuff, is
Sure.
doing the podcast, chopping up clips, and helping them. This is the main one. So I don't publicize this, but I probably should. Is that I'll meet with a realtor every 1 or 2 weeks in my office. They'll come by, and I'll basically give them a social media attack strategy.
Mhm.
And some of them implement it, some of them don't. The ones that do very, very well. And to be
Mhm.
fair, I mean, we talked about this a couple weeks ago, is that it does take you to go out of your comfort zone in order to
Sure.
do it. But the social media stuff is that it's the easiest to do. It's cheap because it's free. It just costs you your time.
Mhm.
And the beauty is that you don't have to be an influencer. You don't need thousands and thousands of followers. You just need to market to your audience.
Mhm.
Obviously, take action to grow your audience and attract the right type of people to it, but you don't need to be everywhere doing all this crazy stuff. You have to stay top of mind. If you can provide some entertainment, fantastic. But
Mhm.
I think the majority of the issue, Chris, is that like most people in the business just aren't posting anything, period. You got to do something. Do
Yeah.
something. So again, yeah, everyone's really digging the podcast and the social media ideas. That's where it shines.
Yeah, I like that. Do something, start somewhere. And a lot of people say, "Hey, I don't," because we get that a lot. I don't like the way I look on camera. I don't like the way I sound. I can never get these videos right. And people are they're spending so much time trying to pull off these super polished professional videos. But there really is something to kind of flipping your phone up, talking to it, dropping it, continuing, whatever it is. I mean, we had that pop up podcast that you guys set up,
Oh yeah.
and what a great way. If you're at a loss for content, if you're worried about the way you look or sound, what a great way to get yourself out there by being on a podcast like yours, or even starting one like yours, where you can kind of, I always say Oprah Winfrey, she's doing pretty well, and she kind of doesn't come up with any content. She just interviews experts, right? So you can be the expert interviewer, or you can be the expert being interviewed. So it's a great place to start. Now, I mean, I see you said you don't put it out there too much publicly. I mean, you don't want all these realtors attacking you like, "Hey, Ben, help me with my social media." But you do work with some people. I mean, if people were interested in learning more about what you guys do, to kind of help agents get out there, as well as how Madison Mortgage can help them, how would they be able to get in contact with you?
Best thing is to just call me or shoot me a message on
Mhm.
Instagram, BLavMTG, and my cell is 917-670-7878. Everyone is welcome. If you grow, we grow. As corny as it sounds, it's 100% true. And what as to what you said before, Chris, it does require getting out of your comfort zone. And
Mhm.
keep in mind that no one is really judging you on camera,
Mhm.
and the only people that do are miserable people, or
People you
people
wouldn't
that
want to
are,
work with anyway, right? I
yeah,
think you
people
said
that
that
are
the other
kind of
day.
jealous. Like I
Mhm.
had a couple weeks ago, I came across, or one of my staff members came across someone who was like, "Oh, I see Ben's running around on social media and he thinks he's a star and blah blah blah." And I was just like, "Why is this guy hating?
Yeah.
You've got better things to do than hate on me, and I'm perfectly happy, right?" But
Mhm.
the point is like that never happens. That's happened once out of the
Mhm.
4 years or 5 years I've been doing it.
Yeah.
And it bothered me for 1 second, and I went on with my day.
Yeah.
So,
Yeah.
and you just
It's a
you just
funny
get
thing.
used to it.
Yeah, it's a funny thing. I mean, look, I mean, one thing I noticed, and you've been doing it for a while. You've been doing it consistently, and then on one side you have those people. Oh, look, I see Ben's running around playing on social media. But then on the other side of that, I'm like, you see someone like me. I mean, I coach real estate professionals. I'm like, man, I really appreciate what Ben and the company are doing to add value to agents, and kind of, you kind of figured this thing out. You guys are good at it. And I mean, I appreciate what you guys are doing, both on that, agent assistance side, as well as what you're doing in the mortgage world, because it seems everyone's got nice things to say about you and
Oh,
your
thanks,
company.
man.
So that's always good to hear. And like you said, you're only as good as your last deal. So you must have a string of pretty decent last deals going on amongst everybody. And I mean, what's the future look like for you now? I mean, you got the podcast. I mean, you're crushing it with the mortgages. So what's next for Ben Lavender?
Next is to really just continue growing my team, trying to grow production, and do more in-person events with realtors. So, for instance, we were talking about just now social media and coaching, right?
Sure.
So, we want to host regular events for them to help them grow, especially for the realtors that we've been working with for a long time. We want to give back to them. Obviously, new ones are welcome too, but we have to take care of who's been taking care of us first.
Yeah.
That
Mhm.
counts. And it's not easy to grow and to get a lot of these realtors to kind of
Mhm.
step out of their comfort zone and do it, because a lot of them
Mhm.
are camera shy, for the
Yes.
reasons we just spoke about. So it's the in-person stuff. It's maybe we're going to do some CE.
Mhm.
We're going to do more events on how to grow their business, just general business planning. It's an entrepreneurial business by nature. If you don't have a plan, they say you
Yep.
plan to fail. So it's
Yeah.
just mixing it up, doing more in-person stuff, helping people grow. And it's not rocket science. It's just being consistent and constantly evaluating your systems and your business so you can grow. Simple. It's really simple.
Yeah, yeah. It's because just a lot of salespeople are just in generally so reactive. It's just kind of like, hey, when it rains, it pours. When they're busy, they're just dealing with the stuff. But like you said, planning, being proactive about what am I going to do this year, next year. We do a lot of business plans. I think in the fall. That's kind of like when the year starts for the real estate industry is in the
Yeah.
fall, because all that work that you do, it's going to close the following year, and just being super clear on who do you want to become? What do I want to be better at? Do I want to be better on video? Do I want to put together a podcast? Do I want to improve my social media marketing? Or you might decide that that's not for you at all, and that's okay. But a few times today you said do something. Just start somewhere, do something, pick something and do it. Get out of your comfort zone a little bit, and it doesn't have to be kind of like a big change. And magic will happen. And you need to have the right people around you. So I think that's kind of who's your who's supporting you, and it comes down to your partners, your mortgage partners, your coaches, your mentors, your brokers, all that stuff. So who's in your circle? And I think if you don't have someone like Ben in your circle, I think that's a great place to start. So people should get in
Well,
touch with you for
I,
sure.
I, I was just going to say the same thing, Chris. Like, even for me, I've had several mentors throughout my mortgage career,
Mhm.
right? And they have played a key role. So obviously, you do coaching, which it in turn is mentoring, right? In a way,
Sure.
one form or another. It's key. I wouldn't have gotten to where I am without that. And sometimes you need to mix it up. Sometimes I take a break from a mentor and I go back to them a couple years later, right? I've had, I think, 3 coaches throughout my career. So it's absolutely key.
Yeah.
And going back to what you were saying about doing something, I think they say on average it takes like 26 days to implement a new, like for a habit to become permanent, something like
Yeah.
that.
Mhm.
So it's one at a time. And again, the reason that I brought that up, Chris, is because people will go to events, whether it's a social media event or a general just business practices and things to do event, and they're so overwhelmed
Yeah.
that they end up doing nothing. So to those people, I say, take a deep breath, pick one thing and
Mhm.
do it. And
Yeah.
and typically, if it's a new thing that's a little out there for you, do it first thing in the morning when you wake
Mhm.
up. Before you get busy with your day, you get bogged down, you got to run around, take the kids to school, whatever it is, get it done first thing in the morning. If you need to wake up before everyone else, do that. Just do it. This is going to be a very, very interesting time in the business
Mhm.
over the next 6 months to a year where you have to give it your everything. So
Yeah.
you can't leave anything on the table. You got to throw the kitchen sink. That's for sure.
So it's funny you say that. The law of diminishing returns says the longer my list of things gets, the less likely I am to do anything. We had that event. We're just in the morning, 5 different speakers, all this information. It's like, hey, I'm overwhelmed. Where do I start? And that's sometimes where having somebody, having a mentor or a coach can kind of help you sort out. Okay, well, what's in alignment with where you want to go and who you want to be? And then I love how you said do it early. Sometimes, I mean, I used to our classes when I had my office, we used to start our classes or meetings at 11 o'clock because we were kind of doing our important things from 8 to 11. And I think a lot of the realtors thought, "Yeah, oh, that's when the day starts, because then they would all start coming in at 11. I'm like, no, we leave that morning time so you could get important things done. So whatever's super important, if you can get all the important things done, by noon in your day, the rest of the day falls into place, and uh, that's when all the magic happens. You'll definitely see some results. So thank you for sharing that, man. See, look, it's
Of course.
it's across. You didn't just hear it from me. I promise I didn't tell Ben to tell you that. that's just
No.
that's just
To,
kind of we call it high
to be fair,
performance
Chris, I
habits. This is how
probably
they think.
heard you say it a couple weeks ago, and
it's a that's just look. That's how we think, and it's important. It's important to surround yourself. Look, so if you're kind of if you're hearing what the things that Ben's saying, hey, I think the same way. Possibly you work the same way. So I encourage people to get in touch with you, and you're definitely easy to get in touch with. You're
appreciate
all
that,
over
man.
social media, and thanks for joining us today for sure.
Thank
And
you.
if nobody's got any questions, I just want to get some parting words from you. If any last minute nuggets you want to throw out to everybody.
Last minute nuggets. So I guess this goes for both. Well, this is primarily for loan officers, right? If you're a loan officer in the business, be ethical, be transparent, be
Hmm.
upfront. Especially now, it's more important than ever in the business. I know I said it in the beginning, but it's so true. And of course, for those loan officers that are newer in the business, make sure that you have, again, Chris, going back to what you said, make sure you have a good mentor. You need a mentor in this business to succeed. It's complicated. There's a lot going on. You need to know underwriting guidelines. You need to know how to market to get yourself out there. You got to know how to basically structure and run a business in a way and manage a team. There are so many aspects. Always keep growing, always keep learning, and get don't get intimidated by what's going on in the market right now. Right
Hmm.
now, loan officers are terrified. And I'm pretty chill right now. It's like,
Yeah.
okay, we expected this. It's the 2 year party that was 2020 and 2021. We knew it couldn't last forever. We knew something would go down. We didn't expect rates to go up this quickly, but we did expect them to go up.
Hmm.
So remain calm, because if your consumers, and let's say you're a loan officer and you're working with a brand new realtor that you've been courting and trying to work with them for a while, and you start freaking out, you have to remain the cool, calm, collected captain.
Hmm.
right? And this also goes with realtors as well. It's like if you freak out, your clients are going to freak out. So they feed off your energy, they feed off of your confidence. So stay calm and be the rock in the transaction. If you
Yeah,
do that, you'll be fine, and you'll also get more business.
yeah, it doesn't hurt. Like, I mean, I mean, any kind of bad news, I can hear it from Ben all day, right? So, um, we do. Somebody said that they have a question. I can't see your name here. You must be on maybe one of the other channels or something. But feel free to post it wherever you are, and I'll be able to pull it up here, and we'll get it answered live. Said, hey, I have a question. If you're still with us, yes, no. Why is he so handsome?
Ah, that would be it. It's the shine right now. There's a light directly above me, and it's just making everything super shiny. So I hope that answers your question.
Yeah, look, so it's you got Ben right in time for the special head shine. That's why he's so handsome. So you heard it here, folks. Thanks for chiming in. And if you have any questions after this, if you watched on the replay, just feel free to post it in the comments, and we'll be able to get back to you. We'll be able to get you over to Ben, and we're looking forward to seeing you in the virtual world. So no editing here. It's always live. And again, Ben, thank you so much for joining us. I
First, thank you,
appreciate it.
man. You're the man. This is very smooth, and you are an amazing interviewer, by the way.
And
So
likewise,
makes
so
my job
we
easier.
smell our own. I appreciate that. So and we'll talk soon for sure.
Awesome, man.